Klarna's 17 billion IPO has just turned 40, yes, 40 staffers into overnight millionaires, while Nvidia, Canva, and Palantir workers are seeing similar gains. All right. So, let me see. All right. So, Klarna made its New York Stock Exchange, the NYSE, New York Stock Exchange debut this week, sending its market cap soaring to $15 billion, propelling around 40 staffers to millionaire status overnight. Yes. With its executive team gaining the most from the IPO, it's not the first time Klarna's success has created ultra rich employees. At least 115 of its workers have hit seven figures net worth since 2021. And staffers at other tech companies, including Nvidia, Canva, and Palantir, who invested early, have also made it into the elusive wealth club. So, Klarna, it's I don't know how I feel about that, right? I mean, I'm with it actually. Now that I think about it, I'm with it. Klarna makes a lot of money based on people's poor decision-making skills. That's what it is. And your poor decision-making skills allowed 40 of their staffers to become millionaires overnight, right? I'm just saying.
I'm just being honest.
I'm just being honest, right? But shout out to them. Shout out to those 40 staffers. Many might think that only savvy investors, pioneering founders, and rising CEOs become millionaires overnight, but employees are reaping seven-figure net worth from the success of their companies too. 3 dozen lucky Klarna staffers just joined the ultra rich club thanks to its recent stock windfall. So these 40 staffers, I don't know exactly how long they've been with the company, but when Klarna was private and they said, "All right, we are going to be offering the they have different options." So they might be offering the ESSP, Employee Stock Purchase Program, or ESPP, Employee Stock Purchase Program, right? That's one way. They can also be saying, "All right, as a form of payment, as a benefit, which my company does this, we are going to be giving you shares of the company and whatever, and they can have them as part of those benefits. They can have those like vested shares. So I know, like, so one structure that some companies do is, all right, per year we'll give you, let's say, 100 shares, right? However, you can only vest a certain percentage of those shares per year. So we give you 100, and this is a way to keep talent, right? We give you 100 shares, but after year one, 20% of those shares are fully vested. You can do it with whatever. Each year you get 100 shares, but so it's like it keeps trickling in, where it's like, oh man, like, I'm now, if you were to, like, "Oh, I'm gonna go somewhere else," you end up leaving some money on the table, to be honest with you, right? But let's say you put a 100, so you get 100 shares from the company, and after a year, 20 shares are vested. After 2 years, now you have 40 vested shares, but not really, right? Not really. So you have the 40 from the initial 100, but the 100 that you got in your next year, you're also going to get those 20 as well. So now you technically have 60 vested shares, and you have a total of 200 shares that are available to you. So, and the second just keeps continuing. Now, if the company ends up going public, all those shares that you have, and based on if the company does really, really well going public, that might make you a millionaire overnight. Yes, indeed.
Freaking awesome.
That's how it works. All right. So Klarna made its New York stock market trading debut this week, with shares skyrocketing after the fintech company and its backers raised 1.37 billion in an initial public offering (IPO). The business's shares shot up as much as 43% on Wednesday. Geez, opening at $52 a share and closing at around 45.82 each. I guess they lost a little bit. Is that? Let me see. Wait, what? No, it didn't lose. Hold on. So it shot up as much as wait, it opened at 52 a share and closed. Okay, so it went down. It went down. Well above the IPO. Wait, what? Hold on one second. The business shares shot up as much as 43 on Wednesday. Open. Oh, wait, opening at 52 a share. Well above the IPO price is 40 ahead of the listing. So I guess I'm confused by this. This shot up Klarna's market cap to a whopping 17 billion and is estimated that the stock surge catapulted more than 40 current and former Klarna staffers up into the millionaires club, thanks to employee stock. What did I just explain to you? What did I just explain to you? Thanks to the employee stock perks, right? So but I really want to understand what this means. Um, Let me see. I'm gonna copy this. Go back to Gemini. I'm gonna say I was reading an article about Klarna's IPO and I didn't understand what this sentence meant. Can you explain it to me as I'm an eighth grader? Oh crap. I didn't put the I didn't put the actual let's go to this is how I use Gemini. Like I'm like, all right, I don't understand this. Can you make this make sense to me? If you saw some of the back and forths that I have with Gemini, like about tech stuff, and how we are surgeons. All right, that sentence has a lot of business words in it, but the idea is pretty simple. Let's imagine it's the release of a super hyped limited edition pair of sneakers. The IPO price, the official retail price, before the sneakers are released to the public, the sneaker company decides they will sell them for $40 a pair. This is the official starting price. In the sentence, $40 is the IPO price. An IPO, initial public offering, is the very first time a company sells shares, tiny pieces of ownership in the company to the public. Okay, got that. The listing release day. Wednesday is the big release day when anyone can start buying and selling the sneakers. This is the listing price. The opening price, the first sale, the door is open and the hype is so huge that the very first person who buys the $40 sneakers immediately sells them to someone else for $52. Oh, the very first person who buys the $40 sneakers immediately sells them to someone for $52. All right, gotcha. In the sentence, the shares opened at 52 a share. This means the first trade of the day wasn't at the $40 IPO price, but much higher because many people wanted to buy. Okay, gotcha. So it opened at 40, but people didn't buy it for 40. They bought it for 52 because they really, really wanted it. Shot up as much as 43%. The peak hype. Throughout the day, the hype gets even crazier. At one point, people were paying almost $58 for the sneakers, which is a 43% increase from the original $40. This is what it's meant when the share shot up as much as 43. The closing price by the end of the day, when the store closes at the end of the day, the price has calmed down a bit. The last pair of sneakers sold for $45.82. This is the closing at around 45.82. So what the whole sentence means, the company's first day of selling its shares to the public was a huge success. They plan to sell them for $40, but people were so excited that the price immediately jumped to 52, went even higher during the day and ended up about $46. Because of the final price was much higher than the starting price, it shows that investors are very excited about the company's future. Gotcha. Okay, this is the way that I use Gemini to educate myself. I use AI to educate myself, right? Because I've heard smart people try to break this stuff down, and I'm like Charlie Brown, blah, 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 blah. And I am sure sometimes when I'm talking about this tech stuff, that is what you guys are hearing as well, right? Blah, 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 blah. But if you don't understand what I'm saying, take it to Gemini and have Gemini explain to you, like, if whatever it is that you are, maybe you spent your lifetime being a carpenter. explain it to me as a carpenter. Watch this. Can you give me another example as that would make sense to a carpenter? See, you're gonna see. This is what I would do. This is how the right use of AI, getting it to explain a complex topic in a way that you can easily understand. Sometimes it's not the greatest examples, right? But let's explain it using an analogy a carpenter would know well. A special batch of rare lumber. Imagine a lumber mill gets its hand on a limited supply of exceptionally beautiful rare wood. Let's say figured walnut. Right, figured walnut is beautiful, although I've never seen it before. It says the IPO price of $40, the mill's price. The mill decides to offer the special walnut to all of its preferred longtime customers first. They set the price at $40 per board foot. This is the IPO price. It's their initial pre-market price before it's available to everyone. The listing price. Open the gates. On Wednesday, the mill announces that the remaining walnut is now for sale to the general public. Any carpenter can come and buy it. This is the see. This makes even more sense. So they open it to the general public. So they already have their pre-sale, right? Their IPO price to the people that they choose to sell it to. And now it says, okay, it's open to the public. So that's the listing. And the first order at the listing price was $52. The moment the lumberyard opens, word has gotten out. Cabinet makers and furniture designers are lined up. The demand is so high that the very first sale of the day isn't $40. It's for 52 per board foot. This is the opening price. Shot up as much as 43, peak demand. The frenzy continues throughout the day. More builders try to get this rare wood. They pay up to $58 for it, closing at 45.82. And so that was like when the rush settled down. That's when they're paying 45.82 per board foot. That makes sense. In short, it was a very successful day, proving that a lot of people think the company, like the rare wood, is very valuable and worth more than the original price that got it. That makes sense. Let me see. Um, Loading says, debt is a hell of a drug. Yes, it is. Yes, it is.
Congratulations, you played yourself.
May says, did you know the CEO of Arena worked for Gemini Exchange before he took over Arena? I did not know that. That is awesome. That is super duper awesome.
Let's get it.
Shout out to the CEO of Arena. Arena is pretty cool. I'm liking Arena and really cool people that I've met on Arena. So, all right, let's. I got so far away from the article. Let's continue with the article. Right. It says this shot up. All right, we read that. All right, cool. We read that. Of course, the fintech company co-founders Sebastian Siematowoski and Victor Jacobson had the most to gain from the debut. Despite leaving the company in 2012, Jacobson still held on to 31.4 million shares valued at 1.1 billion at the time of the IPO. Wow, Mr. Jacobson, you are on it. So if he has 31.4 shares, 31.4 million shares, right? And the stock price, let me do some pocket watching real quick, all right? Let's see, calculator. I know I want to get back to work, but this is awesome. 31.4 million shares, right? So we would say 31412 and then 123. So this is 31.4 million shares, right? Times, let's say, Klarna stock price is currently at 42.92. So it went down a little bit, right? It went down a little bit. Times 42.92 equals 1, 2. So that would mean that Mr. Jacobson is worth, am I right here? Or his shares in Klarna is $1.3 billion. Gee willigers. All right. I'm telling you. You gotta stay on this. All right. So right now, so at the IPO time it was valued at 1.1. Now it is 1.3 billion worth. Right, and we'll reportedly sell 2.5% of them. It's like give me my money. Meanwhile, CEO Semitawaski owns 25.6 million shares with a value of 920 million, and dozens of other staffers benefited as well. There are 37 former and current Klarna employees who now hold shares worth more than $1 million. $1 million. Let's see. According to an analysis from startup publication Stifed, Klarna declined Fortune's request for the comment. Aw. Klarna executives had the most to gain among new staffed millionaires. Aside from the co-founders, many of the Swedish fintech company executive team had the most to gain thanks to their inevitable or inviolable stock portfolios. For example, Klarna's chief product and design officer David Falk, Fock, owns more than 600,000 shares worth at a total of 21.6 million, and at the IPO he plans to sell almost 40% of his stock according to the Stifed reporting. Give me my money. That's what Mr. David Falk is saying. Give me my money. Meanwhile, Nicholas Nelgen, the company's chief financial officer, holds around 280,000 shares worth 10 million and plans to sell 8%. He also wants his money. Hey, Dirty, baby, I got your money. Don't you worry. Say, hey, now, hey, Nicholas, baby, I got your money. Don't you worry. That's what they're saying, right? And Chief Marketing Officer David Sandstrom, who owns around 290,000 shares valued at 10.4 million, seeks to offload 30%. Say, I want my money. I want my money. Wednesday's success is not even the first time Klarna's surging stock has created a new cohort of millionaires. Back in 2021, about 75 current and former company employees made it to the elusive seven-figure club, according to Sifed. The fintech company had secured a $45.6 billion valuation in June that year, crowning Klarna as Europe's top private startup at the time. So I'm going to say this, right? Not going to. Let me see something real quick. What country is Affirm based? Affirm is an American financial company or fintech. So I mean, at least when we are selling our souls to Affirm, at least we're selling it to an American company, right? But for Klarna, we're selling us Americans are selling our souls to a European company, and we're just giving everything away. We're paying these 50% interest rates to at least if we're going to sell our souls, let's sell it to an American company, right? I'm just saying this is for the people in America. For those in Europe, go ahead and use Klarna. I mean, use Affirm because at least sell your souls to. All right, can we trade? If we sell our souls to Klarna, can you sell your souls to Affirm? Right? I am just asking.
I was gonna lie to you, but I had to tell the truth. I'm just being honest.
I'm just asking. It says employees who own as little as a fraction of a percent of a share, as low as 0.0022, were considered a bona fide millionaire. That's awesome. Klarna isn't the only company minting billionaires, and Nvidia and Canva employees also enjoyed a wealth surge. Today is not the only. Today is not just founders who are set up to get rich from a tech boom. Even everyday workers who invest early in promising startups can reap the wealth. Exactly. There you go. There you go. Like Klarna, 4 trillion tech company Nvidia also made many of its 36,000 employees millionaires after enjoying a 3,000% stock surge since the start of 2019. Investing.com financial analyst Jesse Cohen shared a survey estimating that 76 to 78% of the company's staffers had hit seven figures, with approximately half boasting a net worth of more than 25 million. I'll tell you this, right? You got to get your mind on net worth instead of just what is my the cash hitting my account from my work. You don't like use the employee stock purchase program. Use the stocks that they're giving you. Don't just sell them off because, oh, I want to buy some Jordans or I want to buy this video game. No, use the 401k. Use these programs, because if the company that you're working for blows up somehow, you can become a millionaire too. You can sell 8% of your shares and get some money out of that, right? And CEO Jensen Huang took it up a notch this year when he revealed that he has created more billionaires. He has created more billionaires on his team than any other leader in the world. Shout out to Jensen Huang. Canva has also created new millionaires after the tech company launched an employee share sale, which valued the business at $42 billion this August. Cliff Olpschrick, Canva chief operating officer, said in an email to staffers that current and former staffers who are eligible would be able to sell up to $3 million of shares at a price of $1,646.14 each. Founding members and employees from 198 billion software giant Palantir are ranking it in as well. Most recently, CTO Shyam Sankar became the 5th Palantir staffer to become a billionaire. A billionaire. Let's go.
Money. Shake your bank.
After its stock skyrocketed by more than 550 million over the past year, OpenAI Sam Altman also pledged to send the net worth of his employees soaring with major bonuses this August. The CEO said he will deliver a special one-time reward to researchers and software engineers across some of the company's departments, including engineering, scaling, and safety, according to reporting from The Verge. Tell me you hate your job. Tell me. These companies, if you are qualified, if you're smart enough, if you are dedicated enough, they can make you a millionaire. A 9-to-5 millionaire. See, me, I like to be in all the mix. I want to create my own stuff, but I also want to get my benefits and I want to get my stocks. I want my stocks, all right? It says the biggest bonus will be in the mid-single digit millions for top talent, while most are expected to be awarded hundreds of thousands of dollars. About a third of OpenAI's workforce, around 1,000 workers, qualify for the envy-inducing payment. Shout out to them. So there you go. There we have it. Look at that, making millionaires. Twista said, in what song was that? Overnight Celebrity, was it? That he can make you a celebrity overnight. Well, these tech companies can make you a millionaire overnight.
I've never been afraid to walk away. Left the shadows in yesterday. They thought they owned the lock and key, but I'm the storm they didn't see.
They whispered out behind my back, thought my strength was what I'd lack.
But I've turned scars into a flame. Their doubts just fuel my untamed. Walked away with my head held high, left their chains beneath the sky. They thought I'd crumble, thought I'd fall, but I'm the one who breaks the wall.
I've never been afraid to let it all go. They thought they held the strings of my show, bound by their words, but they don't know. I'm the storm, I'm the fire, I'm the glow.
They thought my roots would never grow in fields where winds of freedom blow, but here I stand, unshaken, bold, a story no one else could hold.
They thought I'd crumble, thought I'd fall, thought I'd be nothing, thought I'd crawl, but I'm the one who stands so tall. I walk away, I take it all.
I'm the echo in the empty halls, the rebel left when silence calls. They thought my song would fade away, but I'm the voice they can't betray.
I've left behind the chains they made. Their whispers tried to make me afraid, but I don't bow, I don't obey. I walk my path, I find my way.
With my head held high, left their chains beneath the sky. They thought I'd crumble, thought I'd fall, but I'm the one who breaks the wall.